I think that Elon Musk is brilliant. I think he even understands the mentality of the buyers.
It's got to be batteries. It's got to be solar. It's got to be autonomous. It's got to be a lot of things.
Well, but they believe in this man.
7% this year, but taking advantage of the moment, another $5 billion. If you ever thought this company was going to run out of cash, if you can keep selling shares at the rate that they're going, that won't be an issue for a very, very long time, if ever.
Tesla, despite many people thinking that it's just another car company, has a very simple mission in mind. Tesla's mission is to accelerate the world into sustainable energy. Tesla is addressing this problem by multiple directions. They target transport, energy production, and even storage. Tesla has been ramping up gigafactories throughout the world, from the Fremont Gigafactory in California, to the newly finished Gigafactory in Shanghai, China, to the Gigafactory in Berlin, which is right now nearly completion, to his newest member of the family, the Terafactory in Austin, Texas. That's right, this is going to be a Terafactory because it's going to be producing in the terawatt capacity rather than the previous gigawatt capacity. Capital raises through share offerings are not a surprise to us investors because these factories are going to cost a lot of money, and Tesla is at a position of strength where they can definitely take advantage of the strength of the stock to ensure they meet their goals. In this video, I will talk about the recent capital raise of an additional $5 billion that Tesla is doing as of right now, as well as the new price target of $2,500 a share from Gene Munster. Don't forget to subscribe to Electric Invest, where we talk about electric car companies and exchange knowledge for a better investment. Without further ado, let's begin. Earlier today, there was a slight drop, but it very quickly rebounded to an all-time high. We can see over here in this article from MarketWatch that sales agreement comes after price surge to a record boost market cap of over $600 billion. Tesla filed for a sale of a $5 billion worth stock offering. This share sale plan comes after the stock shot up 12.8% over the past 3 days to a Monday record close of $641.76. That rally boosted Tesla market capitalization to $608 billion. Enough to make it to the 6th most valuable US company. This is something that I wasn't expecting. We already know that Tesla already had $14 billion in the balance sheet. I do understand that if you're gonna have such a high valuation, might as well just take advantage and also continue to ramp up production of the gigafactories throughout the world, because a little bit of cash is not gonna hurt, especially due to the inclusion for the S&P 500, where there's going to be a lot of buying still left over on the table as of today. So Tesla can take advantage of this, knowing that this could help a little bit on the index funds. Now, continuing with the article, we see Wedbush analyst Dan Ives said he believes the capital raise is a clear positive and further solidifies his bull case price target of $1,000 and his base case target of 560, which is 12.7% below Monday's closing price. He goes on saying, and quote, "We believe this is a start move at the right time after the parabolic rise of the shares, with the appetite strong among investors to play the transformational EV trend through pure play Tesla over the coming years." Tesla said it entered into a quality distribution agreement with a number of Wall Street banks, including Goldman Sachs, Citigroup, Barclays, BNP, Bank of America Securities, Credit Suisse, Deutsche Bank, Morgan Stanley, SG Americans, and Wells Fargo. Shares will be sold time to time through at the market offering program. Now, just to put it into perspective, Tesla was only at around $50 billion valuation not that long ago. So raising $5 billion right now is less than 1% of the valuation, compared to back then at a $50 billion market cap, in which $5 billion would literally be 10% of the market cap. I mean, that is a huge difference. The more Tesla's market cap keep increasing, the more this type of capital raises of $5 billion affect the stock less and less, especially after Tesla reaches above the $1 trillion market cap. One of the things I want to say about Tesla stock is that Tesla stock is very highly volatile. This is not something that us long-term investors are going to be worried about. This is a highly volatile business, but if you're planning on buying Tesla stock or you were thinking about adding positions to Tesla stock, this is definitely something to keep in mind. There's a lot of shaky hands, if you will, when it comes to Tesla. We already know that Tesla's going to be even stronger, and I mean, this is not something new. A lot of companies like NIO, Xpeng, and many other companies, they do share offerings and they take advantage of the capital raise. But over here in this article, one of the major catalysts that is making Tesla going up is because of this 2,500 price target from a venture capitalist called Gene Munster. This is even way more bullish than Cathie Wood's ARK ETF's prediction. As we can see, the median target was $2,700. This was pre-split, and the Tesla stock price right now of 649 multiplied by 5 to give us that pre-split adjustment would be $3,245. So Tesla right now is well off the park when it comes to this valuation. And remember, guys, that this valuation that ARK ETF was giving Tesla of 2,700 pre-split was actually a 4-year prediction. It wasn't a 2020 or 2021 or 2022 price prediction. ARK literally thought that Tesla on the median target was going to be at $2,700 on the median term in 4 years. Now, this is about a year old, so technically in 3 years, but you get the point. Tesla right now has been pricing in so much. Now, one of the biggest reasons has to be because of the S&P 500, but getting back to the $2,500 price target from Gene Munster, he basically says that Tesla could soar over 300% to 2,500 in the next 3 years. A move like that could push Tesla's market capitalization to over $2 trillion, and only the US listed company Apple has passed that number. These are insane numbers and insane predictions, but to us Tesla investors, we believe that Tesla eventually will also reach to those valuations in time. Now, we don't necessarily think that it's going to happen anytime soon. We believe that maybe in the next 10 years it is possible due to the fact that Tesla is going to be reaching a lot of market share in other businesses outside of the EV market, and this is precisely what Gene Munster is talking about, and he's referring right now to the Tesla insurance business and the HVAC space, which is Tesla tackling into the heating and cooling business. Tesla is definitely planning on getting into the heating and cooling business by creating a one-of-a-kind HVAC system. This could also be used for homes. It doesn't have to necessarily be used for cars. That's just another business that Tesla is tackling that has nothing to do with cars. And when you think about it, it literally defines why as Tesla investors we understand that Tesla is basically multiple startups into one, and many of these startups haven't fully been developed yet. Right now the car business is the one that is the most developed, but we already know the solar and solar roof and solar storage, that is the other side of the business that is ramping up very quickly right now. And the next ones coming up will be the Tesla insurance and the HVAC heating and cooling systems. But I would like to have a word of caution for you guys investing into Tesla, and that is that if you don't already have a long-term position in Tesla and you're thinking about moving in, it wouldn't surprise me if Tesla shares go down after the inclusion of the S&P, because there's a lot of players that are doing short-term moves that are just playing it out for the S&P 500, which is the strongest catalyst right now. I personally see Tesla reaching well over that $780 target before the inclusion of the S&P, if not right around there, and potentially maybe having a pullback in the 600s. But there's so much upside potential for Tesla that it will definitely go back to the 700s and continue to go up. And Cathie Wood is one of those people that believe in Tesla from the very beginning when nobody believed in Tesla. They saw the potential with the autonomous driving, with the software data that every single Tesla is collecting. They saw the potential with the energy storage, the solar roofs, the new battery potential. They saw all of that. So if some of you are a little bit scared about the volatility of Tesla, owning the ARK ETF from Cathie Wood is a good way of being exposed to Tesla, since they own over 10% of Tesla. And that's something that I always recommend for the people that still want to take the benefit of the long term in owning Tesla, but don't necessarily know for sure if they can handle the volatility. I just wanted to talk a little bit about my opinions about what's going on with Tesla. I'm definitely going to make a more in-depth video when it comes to Tesla coming up. Right now I've been making a lot of videos about NIO, mostly because NIO is my newest position, and I started making this channel right around the same time, so that's why I haven't been making a lot of Tesla videos. But Tesla is a tremendously huge size in my portfolio, so if this is something that interests you, don't forget to subscribe to the channel and hit the notification button. I still consider Tesla to be a tremendously huge buy, but again, if you are a little bit scared about the volatility, you can always invest in ARK ETF, which they have 10% of Tesla, and it's a little bit more on the conservative side. Anyway guys, thank you so much for watching, and I'll see you guys in the next video.